So you guys might be wondering why, with the stock market crashing and crypto in a major bear market, why is gold at all-time highs? It's very interesting, and I'm going to tell you why. I think from the fundamental perspective. So it's true that gold is extremely leveraged and it's been a popular asset. And in theory, it should correlate and dump with the other assets, but it isn't, and it hasn't yet. And it might not. Why? Well, what I'm seeing happen with gold, this isn't investment advice, I'm not telling you to trade it. Although our MTP system, it never sold, or never closed all its positions, still letting them run. I think the US is being seen as geopolitical risk. So if gold is a neutral asset, and we'll talk about Bitcoin a little bit too, but gold is a neutral asset. So if you're worried about the Trump administration, or if you're just worried about sovereign debt, if you're worried about the US debt, then you could de-risk from the United States and invest in a neutral asset like gold. And I think that's a lot of what's happening right now. Is there's a lot of question marks around the United States at this moment. A lot of it has to do with the new administration. So it could be that large players want to not just divest from US stocks, but also US bonds. And instead of US bonds being a safe haven asset, look at gold. So we're seeing a large shift of capital into gold. And when it's happening worldwide, the Commitment of Traders report, it doesn't really matter. Even if they show like the commercials, the gold dealers are like super short, and that normally marks tops. Well, if the whole world is going into gold, it doesn't really matter, because that's just a slice of American futures traders. Now, related, tariffs and trade wars hurt economies. Hurt economies have less earnings, and their stock market is less productive or valuable. So the tariffs we're seeing, they're not only hurting the US, but they're hurting Canada, Mexico, China, the European Union. They hurt all countries. It's not good when a fat percentage of every international transaction is taken by the governments. It's not good for the businesses. So there's money coming out of worldwide stock markets and worldwide GDP related investments into a neutral asset like gold. So that's one reason we're seeing gold to new all-time highs. I also think that the number 3,000 is a magnet, and a lot of people have that, think maybe I'll take profit at 3,000. Same way Bitcoin at 1,000 was a round number, and there were some round numbers in the stock market recently. That's a lesser issue. But the question is, why not Bitcoin then? Because Bitcoin is also a neutral asset. And it's true that it's a neutral asset, and I think it might perform well in this environment. It hasn't. It's not that bad. I mean, it's down like 20-30% from all-time high as I'm recording this. Isn't that bad. So we'll see what happens. But Bitcoin is still in its adoption cycle. Gold has lasted longer, and Bitcoin is also more reflexive. There's a lot of leverage that came into the Bitcoin bull run that needs to come out. Bitcoin is still heavily associated with tech stocks because it's seen as a technology play, in addition to being a non-sovereign store of capital. But it's not the United States asset, but it's associated with the US a little bit, I think. It was founded in the US. The US is very pro-crypto. A lot of adopters and holders are American. Obviously, it's popular all around the world at this point, but that's something to consider. So, will gold fall to other assets while the other assets fall? don't know, but this is a reason to trade multiple asset classes. I trade 3 main asset classes: crypto, precious metals, and the stock market, because they don't all behave the same. And we're looking at adding interest rates or bonds to the equation. So interesting. Let me know what y'all think, but that's my theory and my idea. Okay, appreciate y'all. Much love. Peace.